From a closer perspective, Cardano ADA, a prominent player in the cryptocurrency market, seems primed to hit a significant record. Cardano's market dominance is gradually experiencing a steady ascent, reflecting the increasing investor interest and confidence in ADA. If this trend persists, ADA's dominance might soon cross the significant 1% mark, a landmark event indicating a potential surge in Cardano's value. The ADA coin price also appears to be at the threshold of a decisive price move, making Cardano's future trajectory a hot topic in the cryptosphere. Sadly, not everyone thinks about this the same way. Billionaire celebrity investor Mark Cuban thinks the vast majority of digital assets will go bust, even though he is still a believer in crypto. The Shark Tank star had a friendly debate on Twitter with John Reed Stark, a crypto skeptic who founded the SEC's Office of Internet Enforcement, about the merits of digital assets and the SEC's approach to regulating them. Stark argued that crypto's promise has long since faded and alleged that smart contracts weren't actually smart or contracts. He said there exists no intelligence, trust, or privity in smart contracts, just code, which is not only often flawed and rife with error and vulnerabilities, but can also be easily manipulated to do whatever the coders want. In response, Cuban stated that he spent his whole career founding companies that people viewed as unnecessary until they started relying on them. Smart contracts are about 6 years old. Maybe the name isn't accurate, but the utility is valid. 90% of blockchain companies will go broke. 99% of tokens will go broke, just like 99% of early internet companies did. 99% of the startup companies leveraging large language models will disappear, but the winners will be game changers. That's the way that tech works. Cuban also outlined the applications he believes smart contracts can enable, and with this, he became one of the largest industry figures to call out the United States securities regulator for purposely failing to provide cryptocurrency firms with a clear registration process. This claim from someone like Cuban definitely makes history. In a June 11 tweet, Cuban claimed that no registration exists in the United States Securities and Exchange Commission's framework for investment contract analysis of digital asset document, making it near impossible to know what constitutes a security in the crypto universe. Quote, unfortunately, none of the elements presented on this page are part of the registration process, which makes it near impossible to know, with or without any army of security lawyers, what is or is not a security in the crypto universe. He also added that this is an SEC webpage about the Howey test and tokens that often conflict with what SEC enforcement has said publicly. It's worth a read to get more clarity on what may or may not be a security. Among the requirements include the need to disclose all information necessary for investors to make informed investment decisions and other essential managerial efforts that affect the success of the enterprise. But it turns out that Cuban's claims fell on deaf ears as the SEC intensified their move in the markets. Meanwhile, Cuban further noted that the other sectors in the finance industry are receiving much more transparency from the SEC. Rather than labeling stock loans as securities or suing brokers and banks as they are engaging in a commons process, Mark explained, they should do the same thing with crypto as an effort to determine which aspects of crypto are securities and which are not, he added. And recently, Mark Cuban commented on a recently published tweet about the SEC proclaiming Filecoin as a security, and the SEC's letter sent to Grayscale about this issue. Earlier this year, the latter applied to register an investment fund based on Phil and received the reply that Phil meets the criteria of a security on May 16th. Cuban, who had come a long way from being a crypto hater to a vocal crypto supporter, as stated earlier, suggested a way that future crypto companies could become completely decentralized and avoid conflicts with the US securities regulator in the future. He stated that a possible scenario for crypto issuing platforms is for them to release the entire supply of their tokens without keeping a portion as a treasury. These released tokens should be used to provide liquidity using DeFi, and then Cuban added that the original entity that released the tokens should dissolve. In that case, there is true decentralization, the billionaire believes, and regulators such as the SEC will be unable to close the token down, accusing it of being a security, like it has been doing with XRP, Phil, and other cryptos. Cuban is offering strategies for the future, but who and what will fix the present damages the SEC has inflicted on cryptocurrencies? Cardano ADA appears to be the worst hit, as it is gradually reducing to nothing, given that its figures are nothing to write home about. According to crypto law founder and vocal Ripple supporter in the SEC case, John Deaton, the crypto community and blockchain companies must keep fighting with the narrative pushed by the SEC, according to which every token except Bitcoin is a security. When will Cardano stop fighting? And when will there be a well-structured pattern of regulation? Investor sentiment has taken a downturn on Cardano ever since the SEC charges. Who and what would bridge these gaps? A power surge on Cardano ADA can only be worthwhile if the appropriate systems are enforced. Meanwhile, Cardano and Solana seem to be on the same pace lately. So are we going to have a crypto twin? Everything that has happened in the crypto market has affected these two cryptocurrencies. So what should we expect from this? Revolut, a prominent UK-based fintech app, has announced that it will be halting the offering of Solana, Cardano, and Polygon tokens for customers in the United States. This decision was expected as it came after Revolut's provider, digital asset platform Bakkt, decided to delist these cryptocurrencies amid the SEC categorizing these tokens as unregistered securities. According to reports, Revolut's delisting of Solana, Polygon, and Cardano in the US will come into effect starting September 18th. Users who currently hold these tokens will have until that date to sell them. A spokesperson reportedly confirmed that Revolut has no intentions to delist these tokens in other markets where they remain available for trading. Revolut is a self-described financial super app that has been vehemently expanding into digital assets over the past few years. Solana and Cardano faced the SEC scrutiny together, but a glimpse of hope recently emerged from Asia, offering regulatory respite and sparking renewed optimism for both assets. This announcement from Indonesia brings about several positive implications for Solana and Cardano. It will grant crypto traders within the country the freedom to trade their assets without the same level of scrutiny faced in the US. Also, it will provide a degree of regulatory clarity that was previously lacking, potentially encouraging increased trading activities. Notably, the Indonesian government listed 501 cryptocurrencies, encompassing the majority of assets classified as securities by the US SEC. The news from Indonesia further offered renewed optimism for Sol and ADA and their respective holders. It presented a favorable trading environment and indicated a divergence of regulatory perspectives between different regions, and this could thereby impact the market dynamics of these cryptocurrencies. Regardless of the difficulties in terms of long-term growth, the major catalyst for Cardano is still decentralized finance. While Cardano has had some success in other areas of the blockchain world, such as non-fungible tokens, the real future growth catalyst is decentralized finance. And this is the truth. Since the beginning of the year, Cardano's DeFi growth has been at record levels, and it's finally looking like Cardano might one day become one of the world's top DeFi ecosystems. The metric to pay close attention to here is the total value locked, which measures how much of a crypto token is locked up in DeFi protocols. Cardano's TVL is now at a 10-month high, so this certainly bodes well for the future of Cardano's growth. If you're wondering whether Solana might outpace Cardano, then you need to consider this. From a purely regulatory perspective, Solana carries much more risk than Cardano, and for one, it does not maintain a clean slate. Last year, Solana was caught up in the meltdown of crypto exchange FTX due to the close connections between former FTX Chief Executive Officer Sam Bankman-Fried and Solana. And yes, Solana has relied on venture capital model of development. This raises the question again, is Solana really a security? After all, venture capitalists invest in companies, don't they? However, just like Cardano, Solana is making the case that it shouldn't be classified as a security. For a risk-adverse investor, both Cardano and Solana are unappealing options, and probably crypto in general. There's simply too much regulatory risk over the short term, and any direct enforcement action by the SEC could pose an existential threat. Cardano and Solana are in this dangerous boat together. We've already seen how the specter of the SEC enforcement can spook the market, and how trading platforms like Robinhood would rather delist these tokens than risk running afoul among regulators. Meanwhile, at the end of the day, Cardano is not Solana and vice versa. We're not yet certain about which crypto would survive this horrendous season, but if it's Cardano, we should expect a massive surge. But that's going to do it for today's video. Make sure you click on the subscribe notification buttons, and we'll see you in the next video.